China's economic recovery accelerated in the third quarter, GDP expanding 4.9%, driven by a rebound in exports and rising domestic consumption. Lynette Lim tells us more.
Latest data from China show a sustained economic recovery. Q3 GDP was up 4.9% compared to 3.2% in Q2. September retail sales was up 3.3% on year compared to 0.5% in the previous month. Industrial production was up 6.9% compared to 5.6% in the previous month. And fixed asset investment was up 0.8%, reversing a 0.3% contraction previously. Broadly, the data show that growth is gaining momentum, consolidating China's position as the first major economy to recover from the COVID-19 pandemic. Most of this was attributed to a recovery in consumer confidence as shoppers returned to malls and as major trading partners reopened for business. For example, in September, auto sales marked a sixth straight month of gains with a solid 12.8% growth. Domestic passenger flights in September also beat their COVID-19 levels, indicating that the sector was approaching a full recovery. Over the past months, we have seen the central bank provide support in the form of accommodative fiscal and monetary policies. These have come in the form of increased liquidity and loans for small and medium-sized firms. We have also seen tax relief measures as well as subsidies to spur domestic consumer demand. Now, China has been looking to bolster its domestic economy, domestic consumption and its domestic industries to buffer its defenses against an increasingly hostile external environment amid tensions with the US. For the full year, China's central bank governor Yi Gang has predicted growth of around 2%. He said accumulative growth for the first 3 quarters of this year will be positive. This indicates a V-shaped recovery for China, which saw economic growth contract 6.8% in the first quarter, marking its first contraction since at least 1992. Lynette Lim, CNA, Shanghai.